So I know a lot of you guys are real estate investors and home buyers who either live in California or want to buy in California. And as we all know, the headlines about California over the last 2 to 3 years are not good. Lots of people moving out of the state, lots of jobs being lost, and sky-high real estate prices. So I know a lot of you are frustrated. You're saying, is there anywhere in California where we can find a market that's semi-affordable that's still experiencing economic and demographic growth? Well, that's why I made this video for you guys on Riverside, California. We're going to be doing a deep data dive into what's actually one of the highest growth markets in America. Riverside has grown its jobs over the last 10 years by more than cities such as Atlanta, Dallas, and Phoenix, if you can believe it or not. And it's the only big metro in California to actually be experiencing inbound migration over the last couple of years when so many people have actually been leaving California. And it's for these reasons why you want to consider Riverside as a potential market to invest in. So in this video, we're going to be looking at two potential questions. The first is now the right time to buy in Riverside? Does that economic growth equate to future appreciation potential, or should you hold off until prices come down? The second question we're going to ask is, what are the best areas in Riverside to buy? Because let me tell you, more than any other metro or market I've looked at, there are significant differences across Riverside. Quite simply, there's certain neighborhoods and zip codes that I would not touch with a 10-foot pole as a real estate owner, but there's other areas that look to have really strong fundamentals. So we're going to take a look at that question as well. Without further ado, let's get into the data. So I want to start things off with a quick geography lesson for anyone who's not familiar with the geographic landscape of Southern California and where Riverside is located. So if you take a look at this map, we're looking at the biggest counties in Southern California, and the two in blue, San Bernardino County and Riverside County, these are the two counties that comprise the Riverside-San Bernardino metro area. So in this video, when you hear me refer to Riverside or the Riverside market, I'm referring to these two counties. And you can see that they are bordered by some pretty big coastal ones. We see LA County to the west at 10.2 million population, Orange County at 3.2 million population, and San Diego at 3.3. And we want to understand this geographic location because it's a lot of the growth that Riverside is experiencing actually is migration from San Diego, Orange County, LA into Riverside and San Bernardino. A lot of people feel overpriced in those coastal markets. They feel like they can't afford the cost of living. They also feel like the local economies here are bad, so they move to Riverside and San Bernardino in hopes of more affordability and better job prospects. And by and large, they find it. So that's right, Riverside is experiencing tremendous economic growth, and for some reason it doesn't really go reported about. Like, no one thinks about Riverside as being a huge economic growth engine and experiencing a lot of economic and job growth, but it is. When you look at the data, Riverside has actually grown its job count by more than any other large metro in America in the last 10 years. Basically a 32% increase in jobs over 10 years. Compare that to a 6% increase in jobs in LA, and you begin to see why all of a sudden there's a strong narrative and a strong push of people out of LA, which is a stagnating economy with high prices, into Riverside, which is a growing economy with lower prices. And you can see what I'm talking about on this graph where we're looking at the cumulative job growth across Riverside, which is the blue line over the last 10 years. So you can see that it's experienced plus 32% job growth. Jobs have gone from 1.1 million to 1.5 million over the last 10 years. And you can see there was a dip due to COVID, but Riverside's starting to get back to that previous level. Now we're comparing it on this graph to a couple other cities in Southern California. We see LA is plus 6% job growth in the same span, which is kind of pathetic, to be honest. LA's job count in 2021 is almost exactly the same as it was in 2011. And then we see San Diego at plus 12% job growth, which Riverside is about 3 times higher than that. So really massive differences in economic opportunity. And this is an important point to understand because California in general is struggling. California is on the struggle bus. Really a struggling, stagnating economy, lots of people moving out of the state, outward migration, affecting a lot of cities like LA and San Diego and San Francisco. However, that's not affecting Riverside. In fact, it's the exact opposite. Huge, huge job growth in Riverside. How's it going, guys? I put a lot of effort into these videos and they're really time consuming. I love sharing the content with you for free. In return, all I ask is just please hit that like button. When you do that, it tells YouTube it's a good video, gets me more exposure, helps me out financially a little bit, so I can then in turn invest more time into putting these videos out. So again, just hit that like button. In addition, make sure to leave a comment, especially if you live in Southern California. I want to hear what your impressions of the market are, Riverside and the surrounding places like San Diego and LA. What do you think the direction of the market is? Do you agree or disagree with the things I'm saying? All right, let's get back to the video. And I'm just going to add one more city to this graph so you can get an even bigger comparison. Here we go. We have Phoenix now. So we can see Phoenix's job growth at plus 26%, and Phoenix is known as like, the preeminent growth market in the Southwest. And we can see here, well, actually its job growth isn't as impressive as Riverside. So what I want you guys to take away from this is that Riverside has huge economic growth, lots and lots of jobs being added, which is of course good for real estate. And when you add all those jobs to a local economy and you don't build enough homes and apartments, that's going to put upward pressure on real estate prices. It's going to put upward pressure on rents. And that's exactly what's been happening in Riverside over the last 10 years. About 400,000 jobs have been added, while only about 100,000 homes and apartments have been permitted. So that's a 4-to-1 ratio of new jobs to new living units. And you don't need to be a rocket scientist to understand that that's a housing shortage. And if you watch my other videos, particularly the one I did on the myth of the U.S. housing shortage, you're going to know that I'm actually skeptical, quite skeptical of the narrative that we don't have enough homes in America. I think in most places we do. However, there's specific markets, and Riverside is one of them, that just quite simply have not built enough new homes and apartments over the last decade. And for this reason, we're seeing a surge in real estate prices in Riverside. And we can see the history of Riverside's real estate market on this graph, and especially over the last couple of years, you can see that this typical price has shot up all the way to $460,000, which is well above the U.S. average of $281,000. So Riverside is an expensive market compared to the rest of the U.S. However, it is cheap compared to other places in Southern California, such as LA, where the typical home price is almost $800,000. So imagine that. Typical home price in LA is almost $800,000, and Riverside is $461,000. Now we can see that Riverside's actually had a very turbulent real estate history. It's not like a linear progression where prices are growing incrementally. As we can see, in the late 90s and early 2000s, prices really shot up. In fact, they more than tripled from 1997 to 2006. They went from $124K to $420,000, and then boy did they crash over the next 6 years. Prices bottomed out at $199,000 for the typical home in 2012. So it was about a 55% price decline from 2007 to 2012. And I think a lot of people still remember the last housing crash in Riverside, and it's causing a lot of, I still think, concern and agita in the market, because it was quite simply one of the worst hit housing markets in the last crash. Lots of people lost everything. Lots of people got wiped out last time around. Now, since 2012, we've seen a bounce back in home prices. We had a big one from 2012 to 2014. Then we had some, decent acceleration in prices through 2017. They kind of leveled off in 2018, 2019, but then over the last year, they've started going up almost like parabolically, straight up to $461,000 in 2020-21. And now we're basically at the same level in home prices as we were at the peak of the last crash. So I think the question on everyone's mind is this $461,000 legit in Riverside, or can we expect another leg down in the next housing crash? Are we going to see 461 go to something like 300,000? And that's an understandable concern. Look, a lot of markets in the Southwest, particularly the Central Valley in California, got hit so hard in the last housing crash, and it's almost hard to fathom what a 55% decline in home prices looks like. I mean, your house that was $400,000 is now worth $200,000. That's absolutely absurd. Now, the good news is I think Riverside's in a much better position today in 2021 than it was in 2005, 2006 before the last crash. There was a really interesting cocktail of things last time that caused the huge crash. One of them was a significant amount of overbuilding. They were building over 50,000 new homes and apartments a year back then. They're building about 15,000 new homes and apartments today with a much larger population. So the level of building today is reflective of a housing shortage. The level of building in 05-06 was reflective of a housing glut. So that's one key difference between Riverside now and then. The other thing is that Riverside's economy is much more mature today. Its job growth, its total job count is much higher. It's not as reliant on the construction industry like it was 15, 16 years ago to support the economy. So when we do experience another recession, I don't think the underlying economy in Riverside is going to get hit as hard either. The third good thing is that wages, while still low in Riverside, they're about $27 an hour on average according to the BLS. They're much higher than they were back then when they were in the high teens. So very legitimate wage growth going on in Riverside. Don't get me wrong, it's still a heavily service-based economy. There's not a lot of tech or work from home jobs there, but we have seen meaningful wage appreciation over the last 8 to 9 years. It is largely kept up with the home price appreciation. And you can see that reflected on this graph where we're looking at the value to earnings ratio in Riverside over time. And what this metric is, it's taking the typical home price in the metro and dividing it by the average earnings of the average worker annually. So we can see here in April 2021, typical home price was $460, the average annual earnings was $49,000, and that's a 9.3x value to earnings ratio. Now, anyone who's watched my other videos will know that 9.3 is much higher than a lot of other markets. I typically say anything above 6 to 6.5 starts to show a market where people are getting priced out of their homes, and that's not a good thing. However, what I appreciate and like about Riverside is the stability in this metric over the last, let's say, 5 years. It hasn't really gone up by much. It was around 8.1 in 2015. It's 9.3 today. And what that means is that wage growth, the annual earnings growth, has largely kept up with the appreciation in Riverside since 2015, 2016. And that's a key point because we basically see a market today that looks pretty similar in value proposition from 2017 to 2021. In both time periods, Riverside was expensive for locals, but it's not accelerating in its expensiveness, and that's a key point. If you go back to 07, we can see that the value to earnings ratio was like almost 12 to 1, and then it crashed down to 5 to 1. So I think this high 8s, 9 region is pretty good for the shortage in housing that Riverside has. Maybe we'll see a dip down to like 8.5 or 8 if the housing market corrects. But what you like seeing here is the stability in value to earnings ratio. Now, that doesn't mean there isn't downside in Riverside's real estate market. I think potentially the biggest risk factor is the interesting relationship Riverside and Los Angeles have with each other. So in fact, almost all of the positive inbound migration into Riverside comes from LA. That's something that could change on a dime, right? Like if LA's real estate prices were to become cheaper all of a sudden, that could impact the flow of demand into Riverside. So I think the biggest risk factor in Riverside's economy and real estate market right now is actually nothing to do with it in particular. It actually has to do with if LA were to experience a real estate correction. And that's something that largely Riverside can't control. So if you're investing in Riverside, you're also going to want to keep your eye on what's going on in LA because these two markets are very related. Riverside's about 30 to 40% cheaper, but typically the real estate prices in these markets move almost in lockstep with each other. Now, I think the other risk factor that needs to be talked about in Riverside is that there are just simply certain areas in the metro which are not very good or very nice places. We're talking really high poverty rates, we're talking high crime rates, gang activity in a lot of cases, and as a home buyer or real estate investor, these are not areas that you want to be in. I mean, you can even see it if you just were to search Riverside, California on YouTube and then see what the suggested searches would be. It's like Riverside, California, gangs, Riverside, California, crime. So obviously, that's a big component of certain areas within this metro. And what this means is not that you should avoid Riverside, it's that you need to do your research and due diligence to understand what are the neighborhoods to avoid, right? And then what are the neighborhoods to target? And one of the first things that I would look at in a market like this is poverty rate. because the higher the poverty rate, generally, the higher the crime and the higher the instability in home prices. And we're back to looking at the Riverside metro area on a map, but this time instead of by the county, we're looking by the zip code. And I want to just point you guys to the color coding on this map. The greener the zip code looks, the lower the poverty rate. The more orange the zip code looks, the higher the poverty rate. So if we zoom in on this kind of western side of the metro area closer to LA, we see really low poverty rates like Rancho Cucamonga, 5.1% poverty rate. If we go to Chino, we have a 0% poverty rate, 6.6% in Eastvale. If we head down south to Corona, we see 4.5%. Temecula, 5.7%. So these areas in green have lower poverty rates, higher income, less crime. They're going to be more secure investments than the areas in orange, which are the high poverty rate locations. And probably the first area that jumps off the map here is central San Bernardino, right? We're talking really urban area in San Bernardino. Poverty rate of 34%, meaning over 1 out of 3 households falls below the poverty line. We can see surrounding areas are 29%, 27%. So this is an area that I would be really skeptical buying into. Additionally, if we actually go northeast, we have these big, more rural desert zip codes, 92356. We actually see a 40% poverty rate, 32% poverty rate in Landers. If we actually go out to Desert Hot Springs, there's a really high poverty rate out there as well. However, this might be slightly skewed since it's an older population that lives out here who is living more off their net worth and savings than they are income. So I wouldn't be as concerned about the poverty rate out here, but definitely in the more urban area of San Bernardino, as well as this area in northeast Riverside, 92507. These could be places that are problematic from a crime standpoint. If you have an investment property and have tenants, you might have higher eviction and bad debt. So this is definitely one of the first things I would look at in terms of trying to figure out where in the Riverside Metro you want to buy or invest. And that poverty rate statistic is really important to look at, especially now in 2021, when we're kind of at the peak of a housing bubble. If you guys have watched my other videos, you know I think we're in the midst of a big bubble that's going to come crashing down. And these high poverty neighborhoods are typically the ones that when the housing bubble bursts, they're the ones that get hit the hardest in terms of home price declines. And this is exactly actually what happened in the last housing crash. There wasn't an equal dispersion of pain in real estate. The pain was really concentrated heavily in high poverty locations. And there's a variety of different reasons for that. Homeowners and renters in high poverty locations likely have jobs that are more insecure and unstable. During an economic downturn, they might lose their job. But additionally, the other sneaky thing is that high poverty areas tend to have the highest appreciation before a crash. Lots of investors like to pile into these areas and do fix and flips and try to become like kind of a big landlord in a really short amount of time because the prices are cheap. And all of a sudden, all of those investors, when the market flips, they all sell at once. And that causes prices to go down. And this situation perfectly describes what happened in Riverside last time around, where it was these high poverty, those orange zip codes, which had the biggest declines in value. And you can see what I'm talking about on this graph, where we're comparing every zip code in the Riverside Metro, and we're comparing the poverty rate in the zip code in 2009, in the middle of the last crash, to the home price decline from 2007 to 2012. And the first thing you can see is that there's a really strong relationship between the two. This trend line shows that basically the higher the poverty rate was, if you were say above 15% poverty rate, you were probably below 60%, 60 to 70% decline in home prices last time around. If you were in some of these lower poverty rate zip codes, that had poverty rates of 5%, you did get hit hard. 33% decline in Indian Wells, 35% decline in Chino Hills, 37% decline in Upland, but you didn't get even close to as hard. And it's interesting how strong this relationship is. Like, I compared this to other markets across the US, especially in California. And while you do see some relationship between poverty rate and home price decline, it's not nearly as pronounced as it was in Riverside. This was like probably the market with the most relationship between poverty rate and home price decline. And I think that just, again, speaks to the inequality that exists in this metro area. Some areas are really solid, really good. Other areas are really struggling. So if you're a real estate investor or home buyer who's looking for value, and particularly if you're looking for value in California relative to economic growth, Riverside's a really good market to look at. It's much more affordable than a place like San Diego or Los Angeles, and it's actually experiencing inbound migration and economic growth, which quite simply doesn't exist almost anywhere else in California. And for those reasons, it's a market that you want to consider. Now, it does have its risk factors. It relies heavily on migration from LA, and if home prices in LA were to go down, you can bet that they're probably going to go down in Riverside as well. Additionally, Riverside has a lot of areas which are probably not the best in terms of quality of life, crime, poverty. Those are probably locations that you'd want to avoid as a real estate investment. So, Riverside's super interesting market. This video actually took me a long time to put together because I was fascinated by all the differences and ups and downs in this market. So I hope you guys enjoyed this video. If you are looking to buy in Riverside or another area in California and you want more data and you want more help, kind of like what you saw in this video, reach out to me on my website, www.reventureconsulting.com. I specialize in helping home buyers and investors who want to find the best cities and the best locations for security and growth. I help them do that with data through one-on-one coaching. So go to my website, www.reventureconsulting.com, submit a contact form. I'll have a link in the description. And just in that contact form, make sure to give a paragraph or so explanation of what you're doing in real estate and why you think data will help you. And we'll talk about if one-on-one coaching could be right for you. Additionally, if you guys like this video, please just hit the like button. I put a lot of effort into providing this content for free for you guys. So in return, all I ask is just please hit that like button. When you do that, it tells YouTube it's a good video, gets me more exposure. Additionally, make sure to comment, especially if you live in the Riverside or Southern California area. I want to hear what your impressions are of the real estate market there. Do you agree? Do you disagree with anything I said? When you guys comment, it makes me smarter, it makes my videos better, and helps other people out. So please make sure to leave a comment and then also subscribe. We do these market deep dives every week. We also do other videos on real estate more generally around America. If you love data, if you love real estate, if you love economics, make sure to subscribe to this channel. So that's it for today, guys. Make sure to tune in on Sunday because I got a special video planned. We're going to talk about how California and people in California are inflating the housing bubble in the US. We're also going to talk about how they're eventually going to pop the bubble. It's people and it's cities in California which are really dictating how the real estate market in America more broadly is going. It's going to be a really fascinating video. I was really shocked at some of the data that I uncovered. So make sure to tune in on Sunday at 12 p.m. Central so you guys don't miss it. Until then, this is Nick from Reventure Consulting signing off.